Well, it's definitely earned me more money. Just like Decatur, they were paying 70 cents more for summer corn there in August. We were hauling corn 100 mile for 40 cents, and we're making 30 cents, and I wouldn't even known that price was probably on there. I wouldn't have thought of calling Decatur, but when you go to the Grower's Edge page, then it takes all that running around out of it for you.
Good afternoon, welcome to GrainTV. My name is Cody Bills. Today is Wednesday the 6th here, and we had the market trading higher. Let's turn over to the grain hedge trading platform and see where we closed off the day. Corn up 3.5 cents, soybeans down 1.5 cents, and wheat in Chicago here trading up 12 3/4, with Kansas City wheat up 14 and Minneapolis wheat up 14.5 cents on the day. Let's talk a little bit about ethanol production. We will get into talking a little bit about wheat and why I think it rallied, why I think it showed relative strength here today. But before we do that, let's talk a little bit about ethanol production. These numbers came out about mid-morning. We had ethanol production down 35,000 barrels per day to 887,000 barrels per day. Ethanol stocks were down 35,000 barrels as well to 20.76 million barrels. So we saw a drawdown here in ethanol stocks, but we also saw a pretty significant production loss. And when you look at the overall production here throughout the marketing year, you'll see that this is one of the larger declines week over week that we've seen this year, and it kind of brings us back to these production levels that we saw in late September and early October. So this is something that is a little bit concerning. You'll notice that the green lines are, of course, weekly production. The blue line is last year's production, and the red line is the 4-year average. So you'll notice that we have now dipped below last year's production at this time period. We are still above the 4-year average, but when you look at that decline week over week, it's really not a typical decline that we see. Now, one thing that could have been causing this is, of course, maintenance and some downtime there, but this is something that if we continue to see depressed ethanol production, it's something that we're going to want to take note of. Even though this year we are still about 5% ahead of production compared to last year, and USDA is really only expecting about a 1.3% increase. So that is something that we want to pay close attention to. It seems as though ethanol production has declined here. It's going to be interesting to see if we see this ramp back up as we typically see in the 4-year average, and also like what we saw last year. So we'll be paying close attention to this in the weeks to come. Let's talk a little bit about the chart here. This is the wheat chart, and I wanted to mention this because it was the relative strength here in the grain complex. It was the grain that was trading sharply higher. Now, why do I think it traded sharply higher? One, I know that it's been in a downtrend here for a very long period of time, really since last year. You look at December and January, and then the sharp slide there, and then we've just been kind of declining at less of a rate here, a less rapid rate, but still declining. Over the last couple weeks, we kind of broke through new lows. We're trending lower here, and I think when you get that sort of trade action coupled with the news out of the wheat tour, which is really basically saying that the western part of Kansas was not great in terms of production. There was drought that was affecting it throughout the winter. There was some cold snaps there that caused winter kill, and there's also disease problems. When you have all those things, and the tone out of the wheat tour was just not overly positive, and I think what that did is really cause some short positions to cover, and that's why we got most likely this rally here today. Let's talk a little bit about soybeans here. I don't want to go into too much detail, but you'll notice that we are right around that 50-day moving average. We have resistance up there, trendline resistance up around $10, also 100-day moving average. So if we are able to break out here above this 50-day moving average, expect some resistance up around $10. It's a big whole number. It's one of those numbers that will most likely offer significant selling pressure if we do get up around that area. And then, of course, corn here, we are getting a little bit of a snapback. Yesterday we talked a little bit about this. Big old doji, have a big wick there at the bottom where we traded down to the lows and then traded back up and closed near the highs. Basically an indication that bulls were in control at the close of the day, but in the beginning of the day, and really the bears were in control. So what we saw here was very positive trade action yesterday, Today we got a follow through that was expected. That was something I thought we should be looking for, but now we got to consider with that follow through, we're moving back up to areas that should act as resistance. So be cautious here in tomorrow's trade session. Hopefully we'll continue to move higher here, but you do want to be cautious around these price levels, as I think we'll likely see some selling pressure come into the market. Tomorrow is Thursday. That means export sales will be reported early in the morning. We'll be writing about this in our blog. We'll have this on AgWeb as well. Just take a look here. Expectations for corn between 300 to 600,000 metric tons. Expectations for soybeans between basically no sales and 350,000 metric tons, and wheat between cancellations of 100 to actual sales of 100. Now, wheat is close to the end of the marketing year. Soybeans is also in that time period where we typically don't see very many sales. But this is what's interesting. Last week we had very great sales for soybeans, coming in at 433,000 metric tons, well over analyst expectations. Last week for wheat, very disappointing. So these are two grains that I think you're going to want to pay close attention to, as export sales seem to be a very interesting report here that dictates a lot of that trade action throughout Thursday. So thanks a lot for tuning in. If you have any questions about what we talked about, please give the office a call. The number is 877-472-4607. And if you haven't done so yet, take a demo of our 14-day free trial. See what it's like to have live quotes in your mobile platform there so that you can monitor the market and take advantage of opportunities that present themselves even when you're away from the office. Thanks a lot for tuning in. We'll see you here on Thursday.